Good morning, ladies and gentlemen. On behalf of the chairman of the Monetary Policy Committee, I welcome you to this morning's press briefing. This morning's press briefing follows the meetings of the MPC last week, and this morning the chairman of the committee will speak to us on the decisions of the committee. We'll give you the press an opportunity to ask questions at the end of the chairman's presentation. We're live on Facebook at the Bank of Ghana, on the Bank of Ghana website, bog.go.gh, and on YouTube, Bank of Ghana. It's time to listen to the chairman. I respectfully invite the chairman of MPC and Governor, Dr. Ernest Addison, to deliver his statement.
Good morning, ladies and gentlemen of the media, and welcome to the press briefing for the 118th Monetary Policy Committee meetings, which took place last week. The committee deliberated and assessed global and domestic macroeconomic developments for the first 4 months of the year and the balance of risks to the outlook. A summary of the assessments and key considerations that informed the committee's decision on the positioning of the monetary policy rate is as follows. Global economic activity remains resilient despite sustained monetary policy tightening across advanced economies and emerging market and developing economies. The global growth outturn of 3.2% in 2023 largely reflected stronger consumption spending due to employment growth, particularly in advanced economies, and policy support in China, US, and some larger emerging market and developing economies. Other factors that further supported global activity in 2023 were addition to the stock of capital, a rebound in the manufacturing and services sector, improved trade, and the resolution of pandemic-era supply chain disruptions. In the outlook, IMF growth projections point to global growth remaining resilient at 3.2% in 2024 and 2025. Downside risks to the growth outlook include the observed slowdown in the disinflation process since early 2024, geopolitical uncertainty, and elevated debt burdens. Global headline inflation remains above target in most countries. Progress towards inflation targets has somewhat stalled since the beginning of the year due to a resurgence in crude oil prices as OPEC Plus slashed production and increasing prices in the services sector. This notwithstanding, inflation is projected to decline steadily on the back of tighter monetary policy, softening labor market conditions, and fading effects of past shocks. Central banks have remained cautious in lowering policy rates due to the sluggishness of the disinflation process. Policy rates have been kept elevated to anchor inflation expectations and further drive down long-term inflation rates. Consequently, global financial conditions have generally remained restrictive. Longer-term bond yields have also risen due to the expectation of maintenance of a still tight policy stance in the near term. In the outlook, financial conditions are expected to ease in 2024 as the disinflation process continues and oil prices decline amid well-anchored inflation expectations. In the domestic economy, high-frequency real sector indicators point to a sustained pickup in economic activity through the first quarter of 2024. The updated Real Composite Index of Economic Activity recorded an annual growth of 2.1% in March 2024, compared to a contraction of 6.4% in the corresponding period of 2023. The pickup in the index was driven mainly by increased imports, private sector contributions to social security, and tourist arrivals. Ghana's Purchasing Managers Index signaled an improvement in business activity as the index rose to 51.3 in April 2024 from 50.9 in March due to improved consumer demand. The latest confidence surveys conducted in April 2024 point to a softening of sentiments. Both business and consumer confidence dipped. On the part of consumers, these sentiments were on account of uncertainties about future economic conditions, while businesses expressed concern that the recent exchange rate volatility and unstable intermittent power supply situation could significantly raise their operational costs going forward. The disinflation process remained sluggish over the first quarter of the year. Inflation, which declined to 23.1% in December 2023, moved up to 25.8% by the end of the first quarter of 2024. This slowdown in the disinflation process was driven in large part by rising food inflation, mainly seasonal food crop items. In April, however, inflation eased to 25% on account of improvements in the supply of seasonal food crops, which seems to have been countered somewhat by increasing non-food inflation from the exchange rate pass-through effects. Food inflation declined to 26.8% in April 2024 from the high of 29.6% recorded in March 2024, while non-food inflation increased to 23.5% from 22.6% over the same comparative period. Notwithstanding the sluggishness of the disinflation process, underlying inflationary pressures are well contained. All the core measures of inflation monitored by the bank continue to ease. Isolating price increases of energy and utility items from the consumer basket, core inflation moderated to 24.8% in April 2024 from 26.3% in March. Fiscal performance is broadly in line with targets agreed under the International Monetary Fund supported program. Provisional data on the execution of the budget shows that the primary balance on commitment basis was a deficit of 0.6% compared with a target deficit of 0.2%. The overall broad budget balance on commitment basis was a deficit of 1.8% of GDP compared with a deficit target of 1.7% of GDP. Total revenue and grants for the period amounted to 30.4 billion Ghana cedis compared with a programmed target of 37.7 billion Ghana cedis. Total expenditures on commitment basis for the period amounted to 49 billion Ghana cedis compared with a target of 55.5 billion Ghana cedis. Growth in monetary aggregates slowed down considerably, reflecting the bank's liquidity management operations to tighten liquidity. Total liquidity M2 class grew by 29.9% in April 2024 on a year-on-year basis, compared with a growth of 45.6% in April 2023. The relatively lower growth in M2 Plus was reflected in all its components, namely currency with the public, demand deposits, savings and time deposits, and foreign currency deposits. Commercial bank reserves with the central bank surged following the implementation of the dynamic cash reserve requirement. As at the end of April 2024, reserve money growth on a year-on-year basis had increased to 51.9%, mainly due to the changes in regulatory reserves relative to a growth of 46.5% in April 2023. Growth in private sector credit continued to remain weak. Private sector credit slowed to 10.8% in April 2024 from 19.8% in April 2023. In real terms, credit to the private sector contracted by 11.4% relative to 15.2% contraction recorded over the same comparative period. Short-term interest rates on the money market broadly showed upward trends. The 91-day and 182-day Treasury bill rates increased to 25.68% and 28.03%, respectively, in April 2024 from 19.67% and 22.29%, respectively, in the corresponding period of 2023. The rate on the 364-day instrument increased to 28.64% in April 2024 from 27.04% in April 2023. The interbank weighted average rate remained within the policy corridor. The rate increased to 28.68% in April 2024 from 25.89% in April 2023. In contrast, the average lending rates of banks declined marginally to 31.25% in April 2024 from 31.66% recorded in the corresponding period of 2023. Banking sector indicators point to a recovery from the impact of the domestic debt exchange program. Total assets increased by 28.8% to 306.8 billion Ghana cedis at the end of April 2024, driven by domestic currency deposits and other funding sources. Banks also reported higher profits for the first 4 months of 2024 relative to the same comparative period in 2023. Key financial soundness indicators generally improved during the review period. The capital adequacy ratio, adjusted for reliefs, increased to 15.5% in April 2024 from 14.7% in April 2023, reflecting the rebound in profits. Capital adequacy ratio without relief for the banking system was 11.5% at the end of April 2024 compared to 7.6% in April 2023. Liquidity and efficiency indicators also improved in April 2024 compared to the same period last year. The non-performing loan ratio, on the other hand, increased to 25.7% in April 2024 from 18% in April 2023 due to the lagged effect of the COVID-19 pandemic and economic crisis of 2022, which has led to the downgrading of several large exposures of banks. The sector is expected to be strengthened as banks recapitalize and enforce stringent credit underwriting standards. On the international commodities markets, prices of Ghana's major exports, cocoa, gold, and crude oil, recorded gains in April 2024. Cocoa prices continue to increase, reaching $10,116.9 US per ton in April 2024 from $4,235.6 US per ton in December 2023, representing a year-to-date gain of nearly 139%. Crude oil prices increased by 15.2% on a year-to-date basis to $89 per barrel in April, compared to $77.26 per barrel in December 2023. Gold prices also increased by 14.7% at the beginning of the year to $2,334.2 US per fine ounce. The balance of trade recorded at a lower surplus of $744.3 million US for the first 4 months of the year compared to a surplus of $1.39 billion US in the corresponding period of last year. Total exports increased by 4.9% to $5.83 billion US, driven mainly by significant growth in gold exports and a modest increase in crude oil exports. Earnings from gold exports increased by 37% to $2.97 billion US dollars due to higher volumes of exports from small-scale gold production. The value of crude oil exports in comparison increased by 9.4% to $1.27 billion US dollars on the back of both volume and price increases. Exports of cocoa, both beans and products, dropped by 49% to $599.3 million US dollars. Other exports, including non-traditional exports, also decreased by 6% to $981.8 million US dollars. Total imports increased by 22.2% to $5.08 billion US dollars, driven mainly by non-oil imports, which went up by 31.2% to $3.5 billion US dollars, while oil imports increased by 5.6% to $1.55 billion US dollars. Provisional data for the first quarter of the year resulted in a current account surplus of $372.12 million US dollars. This represented a 40.8% decline from the surplus of $629 million US dollars recorded in the first quarter of 2023. The lower surplus was driven mainly by higher imports and increased income payments. Net income payment was $727 million for the first quarter of 2024 compared to net income payment of $508 million US dollars in 2023. Remittance inflows increased sharply to $1.44 billion US dollars compared with net inflows of $980 million US dollars over the same comparative period. The capital and financial account recorded a net outflow of $113 million US dollars, lower than the net outflow of $998.4 million US dollars recorded in the same period in 2023. The reduced capital outflows were largely driven by significant inflows from the IMF and the World Bank, as well as improved FDI flows to the economy. These developments resulted in an overall balance of payments surplus of $84.7 million US dollars in the first quarter of 2024, compared to a deficit of $586.9 million US dollars in the same period of 2023. Gross international reserves position remains strong. At the end of April 2024, the stock of gross international reserves increased to $6.59 billion US dollars, representing 3 months of import cover, compared with $5.91 billion, 2.7 months import cover at the end of December 2023. Gross international reserves, excluding encumbered and petroleum assets, also increased to $4.32 billion US dollars, compared with $3.66 billion US dollars at the end of December 2023. The exchange rate has recently come under some pressure, especially in the Forex Bureau market. The pressure in the market reflected increased demand for higher imports, energy sector payments, and uncertainty surrounding the progress of debt restructuring negotiations with external creditors. These conditions have fed into sentiments and contributed to additional pressures. On a year-to-date basis, the Ghana cedi depreciated by 14.6% against the US dollar as at the 22nd of May 2024, compared to 21.8% depreciation for the first 5 months of 2023. To sum up, global growth remains relatively strong, bolstered by an expansion of economic activity in large economies despite the tight monetary policy stance. For the year so far in 2024, Progress towards attaining inflation targets globally has somewhat stalled as oil prices have risen due to escalating geopolitical tensions. For emerging markets and developing economies, the strengthening of the US dollar and the tight monetary policy stance of the US Fed have induced more headwinds to the disinflation process. Due to these developments, central banks have mostly been cautious to loosen their tight monetary policy stance. In the outlook, however, central banks are expected to start the easing cycle when inflation begins to steadily decline towards targets. The Bank of Ghana's high frequency real sector indicators pointed to steady improvement in economic activity, evidenced by continued steady growth in the CIEA. Similarly, the Purchasing Managers Index firmed up, driven by resilient consumer demand. On the contrary, real private sector credit remains generally weak, while business and consumer confidence softened, reflecting concerns about the high cost of raw materials and foreign exchange market pressures. Ghana's external sector position remains strong, although the current account surplus nearly halved in the first quarter of the year. Performance in the current account reflects a rebound in imports and net income payments. Accumulation of reserve buffers remains on course and set to exceed the program expectation in June, largely due to the domestic gold purchase program. The bank's reserve at end April 2024 currently stands at 3 months of import cover. The exchange rate pressures witnessed in recent weeks reflect a weakening of the current account surplus due to higher import demand, lower export revenue, especially a sharp fall in cocoa export earnings. Foreign exchange market pressures also reflect robust public spending on IPP arrears payment and capital expenditure outlays. There are also indications of increased pressures from importers diverting foreign exchange demand requirements into informal markets, increasing speculative demand for foreign exchange. The Bank of Ghana, however, has adequate reserves to manage these shocks to the foreign exchange market, having added over 600 million US dollars to the current foreign exchange reserve levels over the first 5 months of the year. The improved reserves position is also backed by strong liquid monetary gold holdings of over 26.6 tons, estimated at 2.1 billion US dollars, as a result of the very successful domestic gold purchase program. The Bank of Ghana remains fully committed to provide stability in the exchange rate for the cedi. The bank has enough foreign exchange reserves to support the market, and economic agents should stop engaging in speculative purchases as they will suffer economic losses when the correction occurs. The Bank of Ghana is taking measures to improve market conduct and instill sanity in the market for foreign exchange. To this end, the bank has worked with the Ghana Association of Banks to streamline documentation requirements for foreign payments to minimize the incentives to resort to the informal markets. To deal with the high demand pressures on the foreign exchange market, the bank has taken steps in the past few weeks to directly absorb foreign exchange needs of some corporate institutions, and this has led to a reduced pipeline demand for foreign exchange from the commercial banks. The bank is fully aware of the operations of illegal operators in the foreign exchange market and is working with the Financial Intelligence Center to sanitize the market. Foreign Exchange Bureau monitoring will be stepped up to ensure compliance with their regulatory framework. In line with this, all foreign exchange bureaus advertising rates outside their premises and on social media platforms must immediately desist from the practice. The bank has set up a task force to monitor all the foreign exchange bureaus to ensure compliance. The foreign exchange market is also affected by sentiments and pronouncements made in this election year, and we urge all to manage pronouncements which weakens confidence in the local economy. On fiscal policies, expenditures outpaced revenue growth in the first quarter, reflecting the front loading of IPP payments, arrears payments. Maintaining straight fiscal policy for the rest of the year will be crucial to strengthen confidence in the economy. On general macroeconomic conditions, the committee was of the view that while implementation of policies at the macro and structural reform level are consistent and align well with the tenets of the IMF supported program, there is the need to ensure that the recent depreciation of the currency does not become embedded into the pricing behavior of businesses and on inflation expectations. The strong build-up of about 2 billion US dollars since the beginning of the IMF program, the strong disinflation process, the significant progress on fiscal policy consolidation, the positive current account balances, and the good progress on external debt restructuring process have all worked in concert to deliver enough buffers to support the exchange rate. The latest forecast shows a slightly elevated inflation profile on account of recent exchange rate pressures and adjustments in transportation fares. However, the projections show that inflation will remain within the monetary policy consultation clause of 13 to 17% at the end of the year. These forecasts are contingent on sustaining the tight monetary policy stance, including aggressive liquidity management operations. Given these considerations, the committee decided to maintain the monetary policy rate at 29%. Thank you.
Respectfully, as always, let's be very uh, brief with our preambles. Let's also make it very simple. Two questions per media house. So, name media house. First round, Tuma, George Yafe, hello, and Sule. Tuma.
Uh, Good morning, Governor. So my Mary from Corporate Guardian Magazine. Governor, you for the first 4 months of the year, first part of the year, we had 4.9% growth in exports, 22.3% growth in imports, which seems to be wiping away our trade surplus. Despite the fact that you have, uh, you say you have enough reserves to take care of this strong increasing demand for forex, don't you think you could take a proactive stance by bringing up policies that discourage demand for forex for importation of goods that already have local substitutes as a way of at least cutting back on this surge in demand for forex at this current time that there's serious demand pressure on our foreign exchange? That's one. The other one says that you said that okay, the figures confirm that the banks have recovered from the domestic debt exchange program. I mean, if you look at the 2023 figures and the first quarter 2024 figures, is the Bank of Ghana considering allowing banks to resume giving dividends for the 2024 financial year if they have recapitalized? And would that include paying interim dividends before the end of the 2024 financial year?
Okay. Tuma, thank you, George.
Thank you, Doc. My name is George Rafi from Joy FM. Doc, you talked about the very strong reserve position that you had right now, and that should deal with the problem. How is the current program that we are in with the IMF again restricting any level of intervention? Yes, you know that you have strong reserves, but still there are some who are betting on your ability to step in because you are in the fund program, and it's concentrating on you rather building up your reserves for the unknown in the future as well. So in one breath, there's assurance that we have the required reserve to step in. But there are some who also the view that, well, it's like a mother having a cane, threatening to beat the child, but hasn't beat the child, and the child is misbehaving. And that's the scenarios. So those speculators out there, they are also still betting on. And that's question one. Question two, has Secretary General, as a regulator, informed you about the next line of action so that you don't get overtaken by any events? Have you been briefed about how the review would go and for you to take the necessary actions as a regulator? Thank
Okay,
you.
George, thank you.
Good morning. Yeah, my name is Selom. I report for Economic Times newspaper. Mr. Governor, I just want to find out. The last week, the finance minister was saying that we, by the end of the year, will be expecting almost $2.3 billion. I just want to know whether it is enough for us to resolve our dollar deficit. Secondly, you talked about we having a strong reserve, and I don't know why we having a strong reserve will make our CD be depreciating so much like that. As at this morning, it was around 16 to the dollar. Thank you.
12 points. Sorry. Oh, what's the
Hello.
source of this?
Hello. Yes. My name is Suleiman
So,
Mustafa.
I have a question for this one.
Suleiman Mustafa, Daily Graphic. Governor, I want to find out from you, what's your assessment of the implementation of the three-tier cash reserve ratio you started implementing last 3 months, considering the fact that, even after that, we've seen inflation inch up and we've seen the forex market or exchange rate highly unstable.
Okay.
How? Yes.
Thank you. Someone will take care of it.
These are all very interesting questions. I'm tempted to start with Suleiman, but okay. So, Thomas, your question was on the weak growth in exports and the strong growth in imports that we have seen from the data over the first quarter of the year. And your concern is about the import growth. This is the issue. And I think we are all concerned about that. There are short-term measures and longer-term measures when it comes to making these type of assessments. I'm sure you know that. The medium to longer-term measures would be to improve our own productivity, improve, local content, improve domestic production to bring our imports within control. And everybody would support policies that would help to achieve that. Obviously, that is not only within the purview of the Bank of Ghana, that's within the purview of several institutions of state. So yes, we all want to see this economy to be less import dependent, but this is what it is as of today. And these are the developments in the trade balance. So despite the development, we have reported that in spite of the deterioration in the current account balance, we've been able to build reserves significantly over the past 5 months of the year. So we'll come to that. I think there's a related question from, maybe I should address that right away, from George Yafi, because his question is, despite the strong reserves program, he suspects that the IMF program does not allow the central bank to be fully effective in the market. I'm not sure if that assessment is right. Yes, we have some indicative targets in terms of the amount of intervention that the central bank will do. But these are not performance targets, right? So they are not deal breakers. So there is some flexibility in terms of those intervention budgets. I think the most important consideration is to look at the program objectives. The program objectives requires that we will build up a substantial amount of reserves because of where we started from. We started from having very low foreign exchange reserves with a lot of liabilities, foreign liabilities for the central bank. And what we have tried to do in the period that the program has been into place is to correct that. As I said in the statement, we have built over 2 billion since the program started. That's a lot of foreign exchange accumulation. So we are ahead of even the 3-year target in the reserve buildup. So I think that it's important to take that into consideration. The central bank has some room to manage the foreign exchange market. We are ahead of our reserve build-up program, and we think that should give assurance to those who are unnecessarily speculating on the currency to desist from doing that, because there will be a correction. And when the correction takes place, I'm sure you know what the implication is. Now, Thomas, your next question was on the fact that banks have recovered and whether BOG is considering to allow dividend payments. In fact, we have already allowed that for 2023. Those banks that are seen to be ahead of the capital plans, right? They are significantly ahead of their capital plans. It was important to keep investors in our banking sector compensated for the developments that have taken place over the past few years, especially the foreign investors in our banking sector who have lost value because of the depreciation of the currency. And we cannot continue to prevent them from getting some dividends from the interest that they have earned investing in our bank. So those banks that have stronger capital positions, I mean, we are dealing with this on a bank by bank basis, and those banks that have stronger capital positions have been allowed to pay some interim dividends. Now, on SG informing the regulator of its next line of action, this is an area where we have not formally received any information on that from SG, both from their group nor from the office in Accra. I have had discussions with their office in Cote d'Ivoire, and I have complained that we don't want to be surprised. We are hearing things in the air, and we want to see the long list of those that are interested in acquiring their shares. We do not even want to see a short list. So I have expressed those concerns to their representative at the Cote d'Ivoire office, and hopefully we will hear something from the group very soon. So, the finance minister's number of 2.3 billion, I'm sure, I mean, if you look at his statement again, he tells you where these resources are coming from, including the World Bank flows, the IMF. We are expecting 360 from the IMF, 2 of those in June, and I think in September. That should give you 700. There are some World Bank flows for about 300. So there are a couple of credits that are in the pipeline, which he has estimated to reach about 2.3 billion. Definitely, and if all of these inflows materialize, that should put us in an even stronger reserve position. And then Suleiman's question was the assessment of implementation of the 3-tier cash reserve ratio. The assessment is that it has been very successful. The banks are complying with the new cash reserve ratio. Initially, we saw that most of them disinvested from the Bank of Ghana instruments to meet their reserves, but we have also stepped up liquidity management operations to complement the cash reserve ratio's impact. So, yes, the tightening effect did happen, but maybe not enough to stem the tick in inflation that you are referring to, and then some of the exchange rate instability that we have seen. Despite all of those measures, we have seen some instability in the general price level. Yes, and bank lending in real terms have gone down. That again is an issue which you would not expect to be corrected immediately. It will take some time for banks to, regain the confidence to lend because of the non-performing loans which are increasing. You would notice that there have been several large exposures in the banking system which have deteriorated from the recent asset quality review that was done by BSD, and most of them have had to make provisions for those losses. So the environment is really not conducive for now for the real sector, and we would see some of these till things settle down. Hopefully, as we get to make progress in the rate of inflation and this currency is more stable, those are the things which create the necessary conditions for banks to be confident enough to lend. So it wasn't surprising to see that private sector lending has remained weak. We have not fully come out of the crisis. We need to fully emerge out of the crisis and have a fairly long period of economic stability to see an improvement in private sector credit growth.
Thank you, Mr. Chairman. Second round, Lord Kingsley, Justice, and sorry, Lord Perry.
Thank you very much, Governor. My name is Lord Nati. I write for 3news.com. Lord Nati. I write for 3news.com. So, Governor, you have cautioned against negative comments that have the ability of disturbing the economy. But there have been claims that the good for oil policy has been shrouded in secrecy. In fact, the former president, who is seeking to come back, says that he is going to investigate this particular policy and punish people behind it. I want your response to this particular one. And also, recently, you mentioned at the Public Accounts Committee that the central bank is seeking to hand over the policy to the commercial banks to run. That the capacity of the commercial banks will have to be built to be able to run this particular policy. Please, I want an update on this particular policy.
Okay. Oh, thank you, Kingsley.
Kingsley, Ghanaian Times. I want an update with the discussion with the government to recapitalize the bank. Or what's the discussion so far? And beyond the government recapitalization, is the Bank of Ghana also going to pursue its own moves for capital? Thank you.
Okay. Thank you, Justice.
Thank you very much, Justice from Shinwa. So, Governor, going back to the exchange rate issue, foreign exchange issue, yes. So there are some indications, speculative though, that some of the pressure on our market is coming from West Africa's biggest economy due to the pressure that they have been under for some time now, because the discussions have been that before their pressure started, we were quite stable here. But then, as their pressure persisted, then we are beginning to see ripples here. Now, have you had any indication of that? And if that is so, what would you be doing to ensure that we don't import unnecessary pressure for ourselves? Then, secondly, still on the same FX issue, government has been giving some, tax, holidays to investors, etc. If you were to be has to advise government on how these things are done. Would you maybe advise government to ensure that these companies do some trade-offs with their dividends so that they retain some of their dividends here? Because around this time, you said because of the repatriation of their dividends, we see some pressure here in the first and second quarter. Do the advising government of that?
Just sorry, last one. Sorry, thank you. Chairman, we are ready for response.
Okay, thank you very much for those questions. Let me start with Karen from SRC. I think that the work of the task force is relatively straightforward. I mean, we have a department in the bank. This is the other financial institutions supervision department, which is responsible for managing the foreign exchange bureaus. And they do have on-site visits to the bureaus to ensure that they are doing the right things in terms of issuing receipts, making sure that they are taking proper identification in their foreign exchange transactions, and also making sure that the forex bureaus are operating as agreed. One of them being the way in which they advertise their exchange rates. You will notice that a decision was taken a few years ago to have the rates displayed indoors. Now, some of them are not agreeing to that. We have seen foreign exchange bureaus now advertising on the social media. So those are some of the things that the task force will be focusing on. They will go back to ensure that these exchange rates are advertised in the manner that we have all agreed on, right? That's an important function for them. And also to generally ensure that they are operating with the agreed rules and guidelines that the central bank has given them. They know the sanctions that we normally apply. You could even lose your foreign exchange bureau license. Now, foreign exchange bureau licenses are renewed every year. No foreign exchange bureau has a license that extends beyond a year or two at the maximum. So these are really very, very short-term licenses, and they come up for renewal very frequently. We can choose not to renew your license very easily. And I think all the operators are aware of that. So, Lord Nati, well, I mean, the issue of the call for reserves not being transparent, well, that's an opinion, but I don't see that at all. I mean, this is, from our perspective, a very transparent arrangement. Remember that the central bank announced that we were going to buy gold to build reserves. I don't see what is, so, special about the central bank buying gold. And we from time to time, we report on how much gold that we have bought with the intention of using it to build reserves. Now, during the crisis, given where oil prices went and petroleum prices went at the pump, there was a need for the government to step in to manage prices at the pump. So there were these government to government discussions with the oil producing countries on the oil side. And some of those agreements were asking for a barter to exchange the gold for oil. So all that the central bank had to do was, instead of sending all of those gold that we are buying to build up reserves, to reallocate some of it for this barter exchange for oil. There's nothing so, you know, difficult about. I think it's a very straightforward uh, arrangement. Obviously, I mean, if you want to know the nitty gritties of that, you have to sit down with those who are operating it to understand, what the details are. But the broad framework, in my view, is very transparent and open. So let's leave it there. And then, yes, on the Public Accounts Committee statement that I made, that the central bank stepped in because we were helping the government with the crisis at the time that we did. We believe that the economic crisis is gradually waning, right? It's not the central bank's job to get involved in gold for oil. This is really the reason why the IMF was asking us to relook at it so that we can focus on our primary mandate, which is managing the inflation and the exchange rate. Obviously, I mean, the whatever goes on in the oil prices also has implications for price developments on inflation as well. But be that as it may, we agree that we are not on the oil side, right? And probably we do not have the expertise, to manage the oil part of the program. And therefore, it would be good to allow the commercial banks to handle it going forward. This is really what I was suggesting at that forum. So let me move on to Kingsley, recapitalization of bulk. I think the agreements are there. The IMF, the Bank of Ghana, the Ministry of Finance are working on a memorandum of understanding on the recapitalization of the Bank of Ghana. So that is still work in progress. The bank itself is looking at ways of managing its costs. But I should tell you that bringing inflation down for all central banks all over the world is a very costly process because your liquidity management operations are costly. And central banks all over the world are losing money, are incurring losses because they need to deliver on their mandate of price stability. So yes, the recapitalization issue will be there. There are, frameworks that we have all agreed to implement, and it's still work in progress. Justice, talking about speculation from our neighboring countries. Yes, nobody can rule that out, given how our informal markets operate, within our sub-region. There's a lot of informal flows between Ghana, Togo, Benin, and I believe Nigeria. So nobody can rule that out. And we just have to be vigilant. That's all that we can. We all want to promote trade. We don't want to impose restrictions in our borders. We are talking about continental free trade. So this is not the time to start looking at raising borders. But I think that those who are in charge of the various exit points have to be vigilant in terms of, and ensure that people stay within the rules in terms of how much currency you can use to cross the border. And then your suggestion on tax holidays for investors, whether they should be tied to retention of dividends, it's a suggestion, right?
Last round, um, Maxwell, Rosemont, and Juro. Okay. Maxwell.
Governor, quick one. In your scheme of planning, how critical is the next IMF review and disbursements? How important is it in your scheme of planning as far as the exchange rate is concerned? Okay. Hello. I'm saying that in your scheme of planning, as far as the exchange rate and general stability is concerned, how important is the next tranche, the next IMF tranche to it? And then just last Friday, Minister said that an MOU has been received and being reviewed. For the central bank, how critical is this, and what are the timelines that you have in mind? Thank you.
Okay. Too small.
My name is Rose Monajete from GH1 TV. My question is, Governor, please, I need an update on the advisor that was given to UMB for their recapitalization. Is the bank adhering to the rules? Thank you.
Okay. Response. Thank you. Apple.
Thank you, Staff Sami. I'm taking this question on behalf of Apple. So the question is, what is the updates on your purchase of dollars from the mines and the oil companies? How much have we purchased so far?
Okay. Thank you. Joshua, very briefly, and then no one.
All right. Good morning, Governor. My name is Joshua from Business and Financial Times. Last Friday, the minister did mention that some amount of payments have been made, quite huge in terms of the quantum, contractors per se, and also IPPs. Do you envisage this impacting your inflation outlook in terms of payments being made, and also how do you see this affecting the CD in the short term? All right, thank you.
Okay, Joshua, thank you. No one.
My name is Norman Akahiford from Northern Report. Governor, my question comes from what you talked about with regards to the fact that it's very expensive on some of the operations. So I want to find out from you, how costly has the BOG's open market operations been, considering the high interest rate environment that we find ourselves? And then also, can the BOG provide a figure on the monies it has paid so far as interest on securities?
Okay, no one. Thank you. Chachaman, ready for us. Thank you.
Surprisingly, no one was the gentleman's name. The you agree with me that the open market operations can be very costly given the high interest environment, and this is really the experience globally, right? So, in fact, I think if you look at the Bank of Ghana annual accounts, this is the single most expensive item on the bank's balance sheet. So the data you would find in the annual accounts. And I can't off the head of the cuff just tell you exactly how much the interest on Homo cost was for 2023. Probably 8.3 billion or so, if I remember. We have with the numbers out there. And then Joshua, I've already said that even in the press release, we've already made the assessment of the impact of all these contractor payments and IPP payments. It's very fundamental to the current circumstances, right? In the briefing that I gave, I talked about the fiscal position, government expenditures, composition of those expenditures. The big items in the government expenditures, these are contractor payments and IPP payments. This has an impact in terms of the size of the fiscal deficit, which has an impact on the amount of borrowing that the government has to take on the local market. It has an impact on the amount of liquidity in circulation, and this liquidity goes into the market, not only chasing goods and services, which has an impact on inflation, but it also has an impact on the foreign exchange market because it puts pressure on the currency. So yes, so you see, everything is linked. So yes, I mean, all these things are the reason why we are where we are, in a sense, on both inflation and then on the exchange rate. Or you want me to explain further? Yeah. And then the question on advisor to UNB recapitalization. The advisor is doing very well. He has submitted his first report. I think for us, it's very assuring that we have somebody there keeping oversight on what is going on there. And I think that so far the report that he has brought are quite satisfactory. They are making improvements. So we are happy that we have somebody there. It's important that we strengthen our oversight on some of these financial institutions, ensure that they are doing the right things, ensure that the internal governance arrangements are working, ensure that the overall governance of the financial institutions are strengthened, and BSD is keeping a very keen eye through very frequent supervision and very intense scrutiny, very intense reporting. All of these things are taking place to ensure that the right things are done to strengthen the weaker financial institutions. Echo, your question was an update on the purchase of dollars from the mines. The data is there. I think that the numbers are there from the mine since inception, 1.6 billion US dollars, and on the year to date so far, 505 million. So you can see that the mines have been very cooperative and they have helped us significantly in building reserves. The gold purchasing program has been very, very successful. And probably that is why Maxwell was asking the question of how critical is this IMF next tranche when you look at it in that context of this 360 million. Kituwa Bianson. Or isn't that the expression? Yes, yeah. We will take it. It would add to our kitty. But as you can see, we are managing well, with the gold reserve program. And then your question on the MOU. Yes, last week the government got the draft MOU, which in a sense gives us the terms of the restructuring of the bilateral debt that is consistent with the IMF program targets. This is a requirement for the IMF to go to the board next month. So that helps in the sense that it helps clear the uncertainty around the debt restructuring program and the uncertainties regarding the Ghanaian economy broadly. So we are very happy with that development. We are quite certain that the fund meeting on Ghana definitely will take place in June, given the fact that we have met most of the performance criteria. We can expect definitely to get some additional financial resources next month, which should also help us to bring more stability to both the currency and then the broader economy. I hope I haven't missed any other question.
Which one?
Interest paid so far on securities is not very different from the interest on the open market operations. Basically the same thing. So it's a important cost item on our balance sheet. Thank you.
Shaman, thank you very much, Fred. We
Bloomberg man, please give him a chance.
Thank you very much, Doc, for this opportunity. Doc, on remittances, you mentioned some billions. Where did those monies end up? Do they end up with the bank, yourself, or they end up at the private transfer companies? Whichever the response is there any scope whether you could, any room where you can use that legislation to channel more of this to support our reserves? Can I have some education in that regard? Thank you.
Okay, thank you.
From information that I had, especially at the 3i Summit, we got some time to interact very much with a lot of the remittance transfer operators. And it's clear that most of them work with both the fintechs and the banks. So these foreign exchange resources associated with remittances are placed in the nostril balances of our commercial banks, and the banks have access to those resources to finance imports. So it comes to the broader Ghanaian banking system. I'm not sure if the central bank wants to go and chase those resources also to build reserves. At the moment, we don't intend taking those resources from the commercial banks. I think that the commercial banks should have access to the remittance flows to finance economic activity. And that's the position for now.
Yes, and let me ask you have once. Just also on exportation. There's this school of thought that a lot of companies who end up exporting do not return the FX here. The transactions terminate somewhere abroad, and it's just difficult for us to see that this export volume has not returned in terms of hard currency. Is that the correct school of thought?
Those who are saying that don't know how exports work in Ghana. By now, you must have heard of the letter of commitment associated with exports. There's a letter of commitment arrangement in place where all exporters have to fill. Now, if you are not able to repatriate export receipts, you are locked out of the system and you are unable to undertake the next export. So it is not possible for exporters to export and not repatriate, except those who have some retention, right? But if you sort of keep more than what your retention allows you, the system locks you out and you cannot undertake the next round of exports. So there's a system in place to check that. Okay.
Chairman, thank you very much. Press, thank you for honoring our invitation. We'll still be available to take some questions. We have some questions, you can send them to us, the normal channel, and provide feedback and clarifications to you. So, Chairman, very much, and the members of the Mpc, we thank you for our viewers who joined our live broadcast. Continue to follow up the bank's social media channels and our website. God willing, meet soon. Good afternoon.